Let's take a look at the biggest stock market players. Do you know what Warren Buffett, Ray Dalio and George Soros invested in the last quarter? Also, did you know what Nvidia invested in? What does the Swiss National Bank do with their money? Well, we're going to have a look at in this video each and every single one of these asset managers. Also, don't forget to subscribe to our YouTube channel. My name is Dalio. Let's crack on. The good news is that we can have a sneak peek of these massive stock market players, what they actually do. The trick is that obviously it's not going to be live and not going to be real time, so there's going to be a delay. Actually, there's 1.5 months delay from the quarter closure. So what that means that these new 13F filings are out. And what are the positions that they opened and what are the positions that they closed. One quick side note, just to let you know, so these 13F filings are up until the 31st of March. What that means is that it's before the actual Trump tariffs and the 2nd of April, Liberty Day, Liberation Day and all those sorts of things. So the massive volatility is not going to be reflected in these filings. However, by the 31st of March, the markets were down roughly by 10%, so that means that we can actually have a sneak peek and have a look at what these big and massive players did. Let's start with the most, let's say the most popular player, Warren Buffett, and his portfolio, the Berkshire Hathaway portfolio, and let's have a look at what they did. So if we look at Berkshire Hathaway's 13F portfolio filings, then what we can find is there were some changes, not many changes, not numerous changes, there are a few changes that they did in the first quarter of 2025, and they also exited from 2 of the finance sector positions. But before we dive deeper into that one, let me just mention this confidential treatment. What does it mean? If you go through the SEC website, which is the Securities and Exchange Commission of the United States, it means that a company can file for confidential treatment if they feel that they would manipulate the markets. Now, in this case, we know that Berkshire Hathaway has another position, another stock that is not listed in this 13F because it was filed through a confidential treatment and it was obviously granted that confidential treatment. We don't know the exact company, we don't know the sector, but what we know is that Berkshire has started to build up significant amounts of stocks in that share and that company. And the reason why they will allow this confidential treatment is quite easy, because if they would publish it here, they would not benefit their own shareholders, because let's say that the company is Apple, and then everyone find out that, okay, so Warren Buffett is buying Apple, so let's rush and buy Apple so that the price will go up. So this is why it was allowed to go through this confidential treatment. So there is one company that we don't know yet, maybe we'll know it by the next quarter, which was filed by this one, and it's not in the 13F filings. Now, let's see the companies that actually decline in terms of the percentages of the portfolio and the nominal number of shares that was going down as well. Mainly is the finance sector. So Bank of America, they sold 48 million shares, and they also exited, so sold all the shares from Citibank and from NU Finance. As you can see, if you go to the Federal Reserve statistics, Bank of America is the second largest in the US. Citibank is the 4th largest banking institute by asset size in the US. So they sort of exiting from the finance sector. And NU Holdings is a bank in Brazil, Mexico, Colombia. So more than just one state, more than just one country. It's a sort of Latin American finance institution. And the other thing that was quite interesting is that they actually build up almost double the position in a consumer staples company called Constellation Brands. What they do, they actually sell alcohol, they sell spirits, they sell different brands of beer. And the reason why it was quite interesting to me, because if you look at all the studies that came out in the last half a year, what you can find is that the new generation is not drinking that much than compared to the old generation. So they might see something, or they might think, Warren Buffett and their management team might think that probably these companies are a little bit undervalued now. So this is why they are buying into these companies, because technically, if you're looking at the alcohol consumption altogether, especially in the younger generation, it is definitely on a decline compared to 20 years ago, 30 years ago, or even 50 years ago. Next, let's take a look at what Soros Fund Management did. What are the positions that they sold, and what are the positions that they held onto, and what are the positions that they opened in the last quarter. If we look at Soros Fund Management, what we can see is that they did some portfolio changes, which is not surprising because their time horizon is definitely different than Berkshire Hathaway's 10, 20, even 50 plus years that they want to hold the companies. What we can see is the main features that were changing in their portfolio. I would highlight three of these main changes. The first one is that they bought a call option, which means that they bought the right to be able to buy that share later in the future if the price goes up, because otherwise they're not gonna execute these rights. And the company was First Solar. As you can probably guess it from the name, it does solar panels in the US and in Europe as well, in mainland Europe as well, and in the UK as well. So they are sort of thinking what would happen if these companies go up. Well, they not just think about that, they also execute on that strategy, and possibly their strategy has worked because of the last couple of days price hike. Probably they are already in the profit, or the other hand could be that they've already executed these trades, sold the call options, and made a huge profit. And the other two that is, I think, worthwhile mentioning is two debt instruments. The first one is a Spotify, which is a bond, a Spotify bond, matures in the 15th of March 2026, and the other one is actually a 4.25% senior note, which matures in 2028, and the company name is Centerpoint Energy, which is an energy company. It provides natural gas and electricity to some of the states of the United States. So that was the main things that I would say Soros Fund Management did. Let's move on to Ray Dalio's portfolio, aka the Bridgewater Associates. He's not associated with that firm anymore. He's not the CEO or CIO of that firm. He's just a partner, and he's just a co-founder of that. So he's not making day-to-day investment decisions anymore. But let's have a look at, because it's obviously one of the largest hedge funds in the world. So let's have a look at what they did in the last quarter. In terms of Bridge Associates portfolio, they did have a massive change in portfolio. If I would say they moved the portfolio to a more risk-averse style, because what you can see is that by the end of 2024, 22% of their portfolio was in S&P 500, and now it's only 8.67%. What that means is that they sold most of this position, or the majority of the position, actually almost 60% of the total position, they sold through the first quarter of 2025. What that means is that they were moving away from risky assets, aka the stocks, and they were moving into actual commodities. If you look at GLD ticker symbol, which is the SPDR Gold Shares ETF, and what we also know because of the average price that was listed on the 13F filings, that these were bought during January. So what we can definitely say is that these institutions have a better advantage, informational advantage, mathematical advantage than normal retail investors as we have, because they sort of already knew that they had to move away from the market and try to stay or stick to a little bit cautious and try to stay in a little bit risk-averse assets. Also, they picked up three new companies, actually 2 plus 1. The first one that I would mention is Alibaba Group. I'm pretty sure that you heard about that. That's the Chinese Amazon. It's not a new position because they already had some stocks into that company, but it was a tiny position and now they build it up massively. So they definitely see something with this retailer going on. The other one is also a Chinese company, it's JD.com. You can see the stores in the UK. There are some physical stores, but also it's an online retailer, mainly shoes and different clothing that they sell. And the other thing is the third company, or the second actually, that they bought brand new shares of that is United Airlines Holdings, which was quite interesting and quite intriguing to me because I was quite surprised that they actually bought an airline in this environment. But this is why the 13F filings are quite good, because you can sort of not just get a sneak peek into the portfolio, but you can get new ideas which you probably weren't thinking before. And let's make two interesting detours from these ones. The first one is going to be Nvidia, because probably it's not that well known that those publicly traded companies who actually buy shares in other publicly traded or privately traded companies, they also have to fill in these 13F forms, so we can have a look at what are the positions that they opened and what are the positions that they closed. Let's have a look at Nvidia's positions now. And if we look at Nvidia, what you can see is, you probably guessed that Nvidia is not an asset manager, Nvidia is not a hedge fund, but they also have to file a 13F filings because they manage some money, aka that means that they have some shares in other publicly traded companies. There was not much change in terms of their portfolio. However, there's a massive change where it seems that they bought quite a few shares of CoreWeave, but the truth is a little bit behind the scenes, so you have to know a little bit of background. So in terms of the company, they were a startup company and they went public at the end of March 2025. And before they went public, actually Nvidia owned a quite substantial share in there. And then when it went public, Nvidia sold quite a few shares. So actually, when you think about that, there's a new position that they bought 24 million shares. It's not really reflecting the reality, because in reality they had more shares, but the reason why it's a new one, because this is now a publicly traded company. And also, if you want to know what is CoreWeave, so as you probably guessed it has some sort of connections to AI. Yes, you're absolutely right. It has connections to AI and it has connections to NVIDIA as well. The reason behind it is quite simple, because it buys NVIDIA chips to build up their AI computing. And how you can get, or how you can utilize this company, it's quite easy. You're not gonna buy $30,000 or £30,000 NVIDIA chips and build up your own AI computer. What you do is you go to a company and you lease that one for an hour, for 2 hours, for 20 hours, for 600 hours, because it's still cheaper. And that's what they do. So for $50, you can lease one of these chips, obviously with the AI computing power, and then you can use it for your own benefit and for your own company as well. So this is what the company does, and NVIDIA still has a quite big share in the company, and they also represent a 78% share of their own investment portfolio. And another interesting player is the Swiss National Bank, which means that they actually buy and sell US stocks and shares, so they also have to fill in a 13F form. So let's have a look at what did the Swiss National Bank do in this first quarter of 2025. And from the two sort of honorable mentions, or the interesting parts of the 13F filings, let's start with Swiss National Bank. As you can see, they moved the portfolio around quite a bit, but actually if we dig a little bit deeper, then it's not massive changes. And also, if you look through these companies and the ticker symbols, it's quite familiar, or it could seem quite familiar to you. And you're absolutely right. The reason why it's quite familiar is because if you look at the weightings of the S&P 500 components, then you can see that it's pretty much almost the same, with some minor changes, than what you can see on the Swiss National Bank's portfolio. Difference between is that they actually buy the individual shares instead of buying the actual ETF, but it's quite similar. The weightings are quite similar. If they decline, if they decrease that weighting, it's quite similar what the S&P 500 did. So the major takeaway that I would take from this Swiss National Bank's 13F filings is that they still believe in America because $141 billion are still in US stocks, and the majority of them are in S&P 500. As you can see, there were numerous position openings and position closure in the last quarter, in the first quarter of 2025 from these stock market behemoths. But also don't forget to subscribe to the channel, because when the next batch is coming up, we're gonna have a sneak peek and we're gonna have a look at those ones. So don't forget to subscribe. Also, just mention in the comments, did you make any investment decisions previously based on these 13F filings, or is it the first one that you ever hear about these ones? So, see you in the next video. Bye.